and I'll hand you straight over to Mr. Williams. Tom's here, of course, as is Rita and myself, Peter. So, Tom.
Thank you for that, Peter. Hi, everybody. Tom Williams here. As usual, speaking to you from Worthing in Sussex, England. And we've got a 30-minute chart up of the S&P 500 on the screen. There's no particular reason why I picked this time frame. So don't think there's a special reason. You can talk about any of these time frames. Now it's 30 minutes. You can see there's quite a few opportunities here. You've got 30 minutes to think about it. Look, sign of weakness right at the top. Supply. Yeah, before the US market opens. Supply. So you've got a warning signal there. Up bar on a narrow spread and little or no volume. That means that there's no demand, no supply. So you'd expect lower prices.
That's higher for you, Tom, actually.
Oh, it's quite, Peter says, I couldn't see it very well. It's quite high at the time. Of course, that's Globex. Yeah, and that's why the computer said, right, okay. You told me to my programming mechanism that if I go up in a narrow spread, close near the top or in the middle, narrow spreads, volume is high, increased into fresh high ground, that's a sign of weakness. So I've obeyed your commands, and there you is, signal. That's what I liked about a computer program. It ignores all the news, ignores everything. It just comes up with what you instruct it to according to the laws of supply and demand. Okay. On that, move down slightly. There are a few green arrows here. Now, what that means is you get a green arrow. Okay. What that means is it gives it a chance to go up. Now, they know the market's weak, so they mark it up on the back of that. Supply coming in. And this is what we call a top reversal. Yes. The computer calls it a 2-bar reversal. Now, this is a sure sign of weakness. When you see these reversals like this, it's almost like a 2-bar upthrust, isn't it? When you've got weakness in the background and the first bar goes up, right, closes near the high, but then it immediately reverses and the low is lower than the low of the previous bar. And we call that a top reversal. It's really a 2-bar upthrust, isn't it? But what it means is it's been deliberately marked up to catch as many stops as possible, mislead as many traders as possible, create as much havoc as possible. And on the back of that, they quickly reverse it. Now, whenever you see weakness appearing like this, if you ever get a no demand up bar, that's no demand. There's no signal on it, look. But you will recognize those given time. Up bar, look, narrow spread, close in the middle, and the volume is clearly low. That's no demand. That's confirming the weakness. You would definitely expect lower prices when you see that. So you've got weakness here, you've got a top reversal, and then suddenly you've got a no demand up bar. Weakness. Market rapidly falls, which they do deliberately to lock as many traders as possible into these top areas. A little bit of buying on that. What's that say?
That says potential climatic action.
Well, it's not climactic. I mean, computer can't get it totally right, but it's not far from the truth. The reason I say it can't be climactic is that there needs to be substantial fall in the background, so that the rule of weak holders are forced to cover through fear. And they will do, given enough drops in the market. And that doesn't look a healthy bar. Why? This one here, the very last one. That one. And the reason for that, of course, is this what we call top tail. In other words, they've opened the market, it's gone up, been marked up, it must be gone up on no demand to fall back to the low after all this weakness. Don't forget, each bar you look at is responding to what's happened in the background, which is only normal when you come to think about it. So that market looks weak at the moment. We are very close to the top. There's been some good news yesterday. I had the news on and they were talking about how much money was being pumped into the US economy by the Federal Reserve. The word millions have disappeared now. It's all billions. And all this money's been pumped into the stock market. I'm not quite sure where it goes. Pumping up shares, I suppose. Now, on that good news, market doesn't look particularly strong, does it? Now, please, if you've got any questions, Rita's here looking at her screen.
Yeah, there's a few questions. You were talking about two-bar reversals. Edmund says, does a two-bar reversal have to come from up and down bars with wide spreads?
Usually they aren't wide. They like to emphasize on the first bar up, it's got to be wide because they want to trap you into think it's going up, trap you in nervous position. If you happen to be short, you panic and cover, and so on and so on. So it's got to be wide and spectacular. And then to suddenly turn around, also it's got to be wide spread down to make sure they lock as many people in or out of the market as possible.
Thomas is asking, because you were talking about programming, can you get the simple trending system programmed into software?
Can I get the
Simple trending system.
yeah? What
Programmed in.
What any program?
Well, in this, I suppose. Well, it's kind of already programmed in because the bars change colour.
Well, this piece of software you're looking at has that. You mean can you put the trending system into some other program? Is that what you mean?
It's quite a simple system, almost.
Just Tom's simple trending in trade guider.
Is that from Thomas?
Yes.
Yeah, hi Thomas, it's Peter. Yeah, so as in case nobody's heard, or say nobody, in case you obviously have, in case somebody in the room hasn't heard of Tom's simple trending system, perhaps Tom will outline it in a moment. But because it's so simple, you can actually see it very easily with your own eyes, which is handy. So in terms of programming it in, I'm not sure how useful that would be. But if Tom explains what the simple trending system is, he's very good at doing that. People in the room can pick up on that. And it is actually, if you look back in history on the charts, and you think, well, actually, amazingly, the simple trending system, which Tom is about to tell you about, seems to be very, very good. So, Tom?
Right. Thank you, Peter. Well, years ago, and I mean years ago, I don't know, 10 years, I knew that we needed a trending system, right? One that worked. I'm not happy with something that doesn't work. So I put a hell of a lot of thinking power and effort. I spent months looking at the trending system and, you know, what parameters did you have to feed into a program to let the program know it's actually turning. It's all very well showing all the down bits, but then when you get to the bottom, you have to show the market turning. Now, it did work up to a point, but by the nature of it, it's so complicated that sometimes it wouldn't turn. And it was saying it was going up when the market was falling, which, of course, is not acceptable to me. So then I was thinking, I was lying in bed one night thinking, and I realized that professional money, once they start a move, they make sure that the close is definitely and always higher than the close of the previous bar. So in other words, it was an up bar. And the reason they do that is because they're frightened of losing control of the move, because there are a lot of predators out there that will jump on the bandwagon if they think that trend has changed, and they will spoil the main player's ability to move that market. So I looked at that and I thought, well, that works. Of course it does. And you'll see that with VSA, when the market's going up, you'll see the blue bars are consistently there. And it's amazing how it works. It goes on for weeks and even months. Now, the same thing with the down bars, the red bars. So you could say we were in a down move here. So the red bar, red, right, allow for one or two up bars, down, down, up, down, down. So you see how it's going. They make sure they mark the market down. They don't want people to have a chance to get out of losing positions. Now, I'm not sure if I could show you an up move. I mean, there's one here, look. Now, okay, so once they're in control, right, you allow a blue up bar, right, allow for one down bar, and ignore bars at a level. So it's up, up, level, ignore, up, 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 allow for one down bar, up, 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 up. And then, but you've got sign of weakness here, look. So that's a simple trading system. There's nothing complicated in it. I suppose if you've got your own code and you're a programmer, you could put that in yourself. It's simple. And it's so simple that it works. Okay. Now that's a sign of weakness there. Look. And if you're following a trading system, you noted that. Up bar, markets don't like ultra high volume and up bars. And there it is. And that's supply. Yes, Peter says, and it's immediately followed by no demand, which is confirming the weakness straight away. That gives you a chance to get in short. Right? So that's a simple trading system. And right at the moment, we're going down. The simple trending system says we're falling, look. And that market won't stop until you see stopping volume. And that comes in the form of high volume. There's high volume, look. But this is part of a top reversal, so it's nothing to do with the trending system. But it is red anyway. Of course, the blue up bar is the blue trending system seems to work far more clearer when it's bullish move, but still works on the opposite side, which it should do. If you've got a principle that works one way, it should work on the opposite. But simple. And the idea of following it keeps you in a trade a lot longer than you would normally stay in. Many traders ring me up. People say, well, yes, I bought on the bottom there, but I sold out at 10 o'clock. If I had stayed in till 2, I would have made a lot more money. You hear that very, very often. So the only guide to that is to follow the trending system. And you know that once the bull move is in place, the only thing that's going to stop it is ultra high volume in that bar or no demand, which you should be familiar with by now. Any other questions?
I've got a feeling there are people here, new people in the room, names that I don't recognise. So if you're new to VSA, just type a new N in the question box so we have an idea of who's new. And because, I mean, it's easy for us to assume that the people we're talking to know what we're talking about. And if there's something that you want clarified, you know, just say. And all right, yeah, a few new people. Okay, this is not okay. Paran says you were talking about the Fed pumping money in. Why there is a federal fund pumping into the market? Who is going to benefit, the government or the institutionals?
Well, you now talk about fundamentals. We don't follow fundamentals. We follow the balance of supply and demand. I'll just remind you to any newcomers, the market without question moves on supply and demand, right? And now, when you talk about professional money or so-called smart money, you're simply talking about traders that trade 50, 100,000 contracts at a time. And when they throw that into the market, it definitely, for the moment, alters the balance of supply and demand. And you'll see that happening all the time. That's why stop a down move, or the previous example, stop an up move, you have to see ultra high volume, usually. So it's a balance of supply and demand that we're following. Now, that overcomes all the lies, the rumors, the misconceptions, the misleading statements. It covers everything. So you don't have to consider whether they're lying to you, which they do. There's so much money involved in the market. They do not blush when they're lying to you, believe me. I know. And so that's the balance of supply we're following. And what with the volume or activity, plus the price spread, plus what the market did on that volume, if you soon get your head around it, and you'll see, oh, the market's weak, or the market's strong. And that's a huge help to you. Don't forget the chart is a language speaking to you in the high, low, close, and volume. And once you get your head around it, and once you can pick it up visually easily, in other words, learn it, you'll have that skill with you for the rest of your life, and you'll never ever regret it, I can assure you, because it overrides all the other confusing statements that surround the markets at all times.
Edmund is asking, when you mentioned a simple trending system stopping on no demand, do you mean no demand on weakness in the background?
No, I mean no demand on the bar. See, if you get no demand on the bar, there must be a reason for it in the background. Now, it may not be obviously clear in all cases, but when you get no demand, there's a reason for that. The reason is that the professional money have seen the market marked up, which they can do and do, right? It might even mark it up on good news. But if the main players are not involved, then you get no demand, and that's not going anywhere. No demand is very, very important. It's on the bar. It's running live.
Question here about this person has listened to your stock selections, Tom, a few times, but doesn't know how to trade that selection. It was said to put it on the watch list.
All right, it's Peter here. So who asked that question? YF. Hello, YF. Yeah, so the idea of the stock picks from Tom are that to look for stocks that are acting stronger or as strong as the index. And to follow on from that is when the index is acting in a bullish fashion, then those are the stocks that are more favourite, if you like, to trade because they're acting in harmony with or stronger than the index. So that's the, if you like, the best bet in terms of choosing a particular stock or a series of stocks. So in terms of when to trade them, well, you'll be trading them when you see a VSA principle in the index, Tom's saying. So if there's a principle in the index of strength coming in, for example, and on that the market goes up, or before the market goes up, it's your skill as a trader comes into play, but you're looking for the index to be strong. And when the index is strong, then those stocks, if they follow what they've been doing, they will also be strong. So I don't know if that answers your question. We can't be more specific than that because, of course, we have to see a principle before you go into the market. And on that very subject, when I first started learning to trade the market using VSA, because of course VSA is a very powerful tool, I sometimes would not wait for a principle. I would almost imagine things, if you like. So the principle was not actually there. I was misreading the chart. And so of course I lost money. So the key thing is to wait for a VSA principle. So there are a number of them. Tom often says there's 6 good ones, 3 principles of strength and 3 principles of weakness. And that's what you're looking for. Maybe Tom, you could outline a couple of examples of a scenario whereby you might decide to go long. And presumably, perhaps the market's come down and the strength comes in and it's tested and up it goes. So something like that, perhaps. Rita wants to add.
And when you answer that, Tom, Don says, and a principle, is that a signal?
Sorry?
Is a principle a signal?
It's a principle, a signal.
Yeah.
Well, it's certainly a signal to you, the observer. The market will normally, on these charts, will not move unless you see a principle. Now, we have a principle on this chart, don't we? We got one here, look, right at the top. weakness. And then we've got a top reversal. That's another principle. And you've even got no demand here. They're all principles. And as your skill at reading these charts, the skill as a trader will also kick in, right? And therefore you learn to trade. But I can assure you this is the safest way to trade. Because if you don't follow VSA principles, then what you're following is a gut feeling that you generated through the input of all the news, the rumors, the poison gas in Syria and all this stuff. You know, are they going to bomb or aren't they going to bomb and all this nonsense, you know, which is not nonsense to people on the ground, but it certainly, as far as stock market's concerned, is. But the market has to have a principle to move. Very rarely can you show me a chart that's had a move without a principle at the bottom or the top, fairly obvious.
Edmund is suggesting that the question is, are the triangles or the principles or the triangles buy or sell signals? Well, no, they are not. And Don is saying a signal as in trade guide a signal. If not, where do I learn about principles? Well, this is all about your own power in trading, and I'm a firm believer that in educating yourself, that is where you get your power. And to rely upon somebody's telling you buy and sell is not your power. It's not, doesn't help you. It's your education. And so where do I learn about these principles? Well, there are books. I mean, I read Tom's book, The Undeclared Secrets That Drive the Stock Market. I read that 3-4 times. I studied it. I drew all the principles, the bars myself. I learnt them, and then I applied it to looking at charts. There's Master the Markets. There's Gavin's book, which talks about setups as well. His, what's it, VSA sequential setups. There's of course all the archives in this VSA club. There's Tom's book with all the newsletters that was published as well. So it's, yeah, it's like Peter's saying, it's like reading music. It's a very visual thing, as Tom said. It's a visual thing, reading the charts, and there are various ways of using VSA, and different people have different ways of trading, all depending upon their own confidence, the size of their account. So for example, for someone like me, I'm a very cautious person, so I might see a top reversal, but I want to see some confirmation of that top reversal. I want to see a no demands at this like this bar here. Some people are more aggressive. They might go short on seeing a top reversal. And Gavin's book does explain quite a lot of the setups. So it's about educating yourself on those principles. So, you know, if you saw a stock that we picked that is a strong stock and the index is strong and you've got the market is rising, a very, very good principle as such is called a test in a rising market. A test in a rising market is a very powerful principle with strength in the background. And all this is sort of described in the books. It's all mentioned. That's why I asked if there's anybody new here. It's easy for us to assume that, you know, you know what we're talking about. So study those books, study the archives, Thomas says, I think Gavin would now make a reference to the new service trading the markets where the setups are explained very well. Yes, yes, they are. They are definitely. Steve, where can we get a recording of this webinar? Hopefully, if there are no technical hitches, after this, we're going to do it tonight, aren't you, Peter? Yeah, he'll upload the recording of this after this we've finished. On the VSA Club under Video Archives. Colin's suggesting also the online courses as well. There are various of those. You go to the Trade Guider website. Right, Alex asking, is there somewhere to buy undeclared secrets? Peter, what's the, it's okay, I'm just typing in here, www.geniechartist.com. I think that's what it's called. I've typed that in the, that's Tom's website for his book. He'll send a hard copy signed by himself. Okay, so Jerry's saying, what is successful about Trade Guider is that the success of becoming a great trader is placed on us and not on secret formulas provided by a website. This is why many people cannot read the chart as Tom discusses. I required a lot of work to learn to read the chart. That is absolutely true. And when I talk about your own power, using your own education, many people are out there looking for something that's going to tell them when to buy and sell at that very moment. And then when it doesn't work for them, they blame it. It's all about, if I get it wrong, it's my fault as far as I'm concerned. And until people understand that and being responsible for their own education, being responsible for their mistakes, and they'll never learn. Where do I get the book with Tom's newsletters? I think that might be on the tradeguider.com website, I think. Or you can contact Trade Guider directly. Another one, Tadia's. Hi, I would like to emphasize that with VSA I am confident even if the market goes against me temporarily, I don't panic. Temporarily, I don't panic any longer, that's fantastic. Yes, very good. Peter says that sounds like you are reading the chart correctly. Can we have a look on? Okay, so Peter, can you I'll put it up, 5-minute chart, and I can see, I haven't forgotten here, Julius, you want us to look at a stock? Yes, we will in a moment. There are a few other questions. If you've got anything that you'd like us to look at, a stock or any chart, then just type it in the questions box. Peter is saying, can we have a look on the 5-minute chart? Is that a turning point or continuation? How can I recognize it? So Tom's saying there is a principle here. Here you are, Tom.
Right, so obviously pays to look at different time frames. Well, the 5-minute chart of the S&P 500. Okay, the market's falling here. There's the red down bars showing the trend is down. Okay, down it goes, down, down. But here, right, you suddenly get the high volume, right? And on that high volume or high activity, it closes on the bottom quarter, shall we say. On the back of that, the market goes up 1 bar, 2 bars. However, it's now meeting no demand here. How do we know that? Because the narrow spread, close in the middle, volume is very low. Now, we would be expecting that anyway, because if that market is going to go up, then it needs to test its volume. We know that's going to happen, and there it is. That's why there's no demand. Market falls, right? Now this is a key one here. See this red down bar? It's down. The low is almost in fresh low ground. Right? It's a narrow spread closing in the middle. It's very narrow, look, and the volume is nothing. Now that's occurred at the same level as this. So we know that at that point there is little or no supply in the market. And that's telling us. Why do we know there's no supply? Because there's no volume there, look. Well, there's no volume at a level which was recently showing very high volume. So that's a principle there, and that's why we get this up move. Now we're not sure how far that's going to go because it's only a 5-minute chart, but there it is. It tells us it's going up.
What about the last bars this gentleman's asking? What do the last 2 or 3 bars tell us?
Well, here,
Yeah.
well, it's telling us that they may, it's telling us that it's not going up at right that precise moment. But if the volume stays low, that's going to go on up. But that's the sort of principle we're looking for. Now, if you saw that in a longer time frame, like an hour, or best of all, a daily chart, then you're going to get a decent up move. So that's a principle at work right there, look. That's what we call principles. The computer is endeavoring to pick them out and automatically send you an email, apparently, which was programmed in by some Russian programmer in Moscow. Well, Gavin has it. Oh, and Peter says it's still under wraps. But that's picking up a principle. And that's, you can't deny those principles. If you see a market fall back down into an area, right, on very low volume, narrow spreads, into an area where there was high volume in the past, then that's definitely clearly telling you there's no supply, where previously there was supply. And it's supply that stops the up move. If there's no supply, there must be demand there. And you can expect some up move. You can make money on those up moves.
Michael, you're mentioning a blue bar which has just closed. Which bar are you talking about? Or which time frame are you talking about? While you're answering that, yes, when Tom said about if you saw this principle with this even if this volume was much higher, and then it goes up and then comes back down with where the volume has dried up is relatively lower than this. If you see that in a hourly chart as a daily chart, then it's got a lot more fuel for a much bigger move, and different, especially after a down move. There has to have been a down move. So it depends what's your style of trading. Are you just looking for several points out of it? Or yes, depends on what you're trading. So different traders have different styles. I have no answer from Michael at the moment. Okay, so Julius is asking, can we look at SODA? It's a NASDAQ stock, Peter. I'll just type it up here. We'll put the daily chart on because I assume that's that's all we've got on here anyway. That's all we've got actually. Just right, so just put a bigger picture up for Tom so he can see. Right, Tom, there was this up. Right. Here. Right. Just putting trend channel on, as Tom requested, and I'll put, yeah, so here's this very high volume here, Tom, on the left here. There, very, and then we've had a bit of this. Yeah, so here you are, Tom. Do you want even less bars now?
Well, no, so I'll leave it like that for a second, but I find it difficult to look at the chart with no trend lines on. I mean, the high volume here, look, here, markets don't like ultra high volume and up bars. And it's that volume there that knocked this market sideways, even down to here, look. And you can see the trend. There is scope for higher prices, so we have to be cautious. Could you put less bars up here? And I can't see. Where's it here?
Yeah, there's high volume here, ish.
There.
Down the same area on reduced volume.
Right. My eyesight's not that hot now, but there's apparently a down bar there on fairly high volume. And 2 bars later, look, it's still a down bar, it's gone. Volume's dropped off. Supply, there's no supply at the moment there. Now this is going up here, look. There's the blue trending system. Up, 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 up. Allow for 1 down bar. Up, up. And that looks like a test. There is scope here for higher prices. There's a bit of high volume here on this up bar. But that's not necessary weakness. It's what we don't like is ultra high volume on these up bars after you've got an up move in the background. But this is like a rocket here, isn't it? Firing off from the base. From a base pad. There is scope for higher prices here. Does that answer the question?
Okay, Jack is asking, which time frame do you prefer for the simple trending system?
There is no simple time frame. Trending system works on all charts. All charts. Because the principles at work, the close is higher than the close of the previous bar. So it doesn't matter what time frame you're watching, the principle will be the same. This is done deliberately by professional players who are trying to generate a move. And they know that they don't want to lose control of that move.
This is that half-hour chart we were
Looking at.
Michael is saying on this chart, as at the start of the webinar, he's not a question, he's just telling that the blue bar which is just closed is not a sign of strength 133, strength coming in, as the volume is too low. I'm not sure. What charting package are you using, Michael? Because ours is a bit different.
Which bar are you talking about? Blue one.
plus the resistance at 1713, the top of possible climactic action may not be cracked, as this does not show proper accumulation. Michael, oh, hang on, Tom's saying you're right. Yeah.
I don't exactly, eh? I mean, I'm looking at that blue bar, and what you said was correct. It's going up on no demand. And that's, why should it go up on anything else? There's no accumulation in the background yet. Where's the stopping volume? Where's the professionals coming in? Admittedly, there's a little bit of, well, it's not really climactic, I'm sorry. There's not enough guts behind that. But you're right, there's no demand. You certainly would not consider this market strong at the moment. And remember, it's Friday too. They get up all sorts of tricks Friday, if they can, to mislead you, mislead the papers, mislead the TV shows, put everybody on the wrong foot, ready for Monday. They do it. We used to do it.
Thomas is saying, you earlier said that the only thing which would stop an uptrend are ultra-high volume up bars or no demand. Would the only thing which would stop a down move be the corresponding, an ultra-high volume down bar or no supply? Yes, absolutely, Tom is saying. That's correct. Right. JCP. Shall I put it in here, Pete? Is it? Peter says it's J.C. Penney, the retailer. Is it? Is it? So let's put up a few more bars, Tom. Yes.
What was the question?
This person says there seems to have some signs of strength.
Not really. It's nowhere near strong enough for me. I wouldn't be interested in this. We have probably skipped through this in our selection of stocks, and the reason why we'd have bypassed it, it's not really acting stronger than the index at the moment. And where's the buy in the background? It's not going to go up unless you get substantial buying coming in, which you can see in the background. And you certainly don't want anything up on the up bars like this looks if it is. This is just going up and down with the index. I mean, you may miss one or two here and there, but generally speaking. Now, if you want them for long term, apparently Philip Friston is doing a selection of long term stocks, and you would definitely want to listen to him. He's a very skilled trader, a fund manager, and this is his living. And he's doing a stock selection for a longer term. I tend to do it just for scalping purposes, which I find far more exciting and interesting at my stage of life. But if you're a fund manager, you need to look at these things for long term. But that doesn't ring any bells with me at all. Well, it may pop up a bit, but
I just put this chart up. But anyway, the question is, can you please tell me what indices should I analyse to know if the dollar will be strong?
Well, you look at the, you need to make a study of the dollar index in the currency markets. We got currencies. It will be looking strong at the moment because all this money they're pumping in.
This is the US dollar index, Tom.
Yeah, that's the index, the US dollar. Well, look at that gap up. That's gapped up because of all those billions they're pumping into the market. But it can't be a real lasting sign of strength, surely.
Just updating it, Tom. It's not updated.
Oh, it's not updated. But this gapping up. Yeah, and now it's gapped up, look, and now it's suddenly hitting narrow spread. And the volume is quite high.
Oh, I missed. Sorry. I pressed the wrong button. Hang on. Here we are. That's better. You're on the right chart now.
Oh. So that's it.
That's the dollar. Reese maybe pressed the wrong button. Thanks.
Sorry, Rita, somebody pressed the wrong button. Okay, so this is the dollar, is it?
Yeah. Well, it's the dollar index. It's a future.
It's a future now. Markets don't like ultra-high volume and up bars. And if that's fairly obvious there, that's ultra-high. Or very high volume. On up bar, right, that means that as they mark the price up, probably on some good news of some sort, right, created deliberately for this, the professional money are unloading into that up move, and that counts for its very high volume. Market falls immediately, look, and that will be your no demand up bar here, somewhere here. So that market now, at the moment, looks weak. Despite the money being pumped in, see how the trading system works? Red down bar, allow for one up bar. Down, 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 down. Allow for one up bar. Now where's your stopping volume? There is a little bit there, look. The volume come in there. But then it's going to have to build a cause to go up. It's not going to just go up from that. It has to go up and down sideways while they're accumulating more of the contracts. Then it'll go up, if it's bullish. But right now, it's all saying this is weak. This dollar index looks weak. Also notice how it's got a mushroom shape to the top, which is classic sign of weakness. Because every time they mark it up, there's some selling, and that tends to clip the top of it all the time, and eventually creates this mushroom top, a sure sign of selling distribution. Don't forget, they can't sell all in one go. They have to support the market as they're selling. So they might be selling like hell today, and then tomorrow they may have to ease off. Right, support the market so they can sell more in the next wave up. These bouts of selling, they tend to come in waves. Okay, so that looks weak.
Morris has just said, the hardest thing for me intraday is trying to figure out how long a sign of strength or a sign of weakness is in play before a countermanding force comes into play. Do you have any advice?
Well, that was the idea of the trending system. Keep an eye on the simple trending system, and before the market will actually turn, a genuine turn, you're going to have to see a principle of stopping volume if it's been falling, going up and down sideways for a bit, and then testing, coming back down to that level with supply disappeared. Then you look at the principle, and then it'll go up. I think you'll find that's correct in 99% of the cases. I would have thought if you went through the charts carefully and tried to recognize these principles in hindsight, then gradually, surely you should recognize them as they're appearing live. It's all about balance of supply and demand. That's all. If the market plummets down into an area where previously there was very high volume, in other words, high supply, high activity, and the volume is now low, then that means that that supply that was creating that high volume previously has been absorbed, disappeared, used up. And that means the market must be bullish. Check it out. And if you're patient, and you'll see this happening live.
Okay, Paran, looks like you used candlesticks. It's in spot forex, the Sunday candle, which is usually a small bar, is also part of the chart. Can we consider the Sunday candle and Sunday volume in our reading of the chart for VSA principles?
Well, yes, you can get away with murder by following VSA because don't forget the volume is always relative to the previous 10 days, 15 days or so. And therefore, the figures can be distorted by many millions. But as far as we're concerned, it'll still show relatively accurate volume as far as we're concerned. So I wouldn't worry about that too much. But obviously Sunday, there's no trading. Yeah, well, if it's extremely low volume, there's something wrong. It can't be right. Well, even so, we can't trust these people entirely. And I know that they will, if they can, they will distort the figures, hold back the volume, and even don't let it out for the next day or so on some excuse. They're not there to help you. Remember, there's nobody in the market there that wants to help you. And when you think about it, why should they? They're there for their own benefit, not yours. I'm sorry, but that's how it goes. Now you might say, oh, well, they're not, well, in that case, if they don't want to help us, why do they give us all the dates when all the news is coming out? We know that almost a week in advance. And that should be an eye-opener for you, because they're telling you all these dates because they want you to read the news, not because it's going to help you, but it's going to mislead you into a wrong gut feeling, shall we say. It's these developments of these gut feelings that are big, big danger to you. They're not based on fact. They're not based on any principles. They're based on what you're hearing and what you think on what you're hearing the result should be. course, when you've got all this distortion and all this money at stake and people lying to you and God knows what, this is what's happening.
Okay, we are running out of time, and we actually do have to go on time today, all of us. So, but one here, CTL Weekly. We'll just make this our last one because we have to go soon. So CTL Weekly, and Edmund asks us to put 50 bars up, and if we can't answer your questions during the session, put them in the VSA Club. We're here on Sunday doing the newsletter, and Tom can look at them there. So this is CTL Weekly, Tom. We've got this here, right?
It's a weekly chart of what?
CTL. I don't know what it is.
CTL stock. Well, I mean, this is in a downtrend, isn't it? It's certainly not acting stronger or as strong as the index, that's for sure. And where's the stopping volume? Where's the climactic action to the left here? As the markets fall, you're vulnerable to professional money got their eye on it and think, oh, I think we can make some money here and we're going to go in. But where? There's no sign of them coming into this stock.
Is that high volume on the left too long ago, Tom?
Well, here. Well, no, that wasn't stopping volume because you've got this was created by the huge drop here. There was some fundamental reason why that fell like that, and that brought that out. No, it's not stopping volume. Stopping volume appears not like that, not in one go like that. But now here, this is where you'd expect to see stopping volume, around about here. But there isn't any. So this stock is not acting strong, and it's certainly not the stock you want to be interested in going long.
Okay, we've run out of time. I hope it was a useful session for you and those new people in the room, that you got something from it. We will be back next Friday, same time, same place, and Tom will be doing his weekly newsletter on Sunday, and that will be in the VSA Club on Sunday. The recording of this will be up, hopefully. We always make promises and then we get a technical problem, but we plan. Peter will be doing it in a minute tonight. So great that you were all here, and we will see you next week. Thank you. Bye-bye.